is the DeFi Decoded podcast by 9 Point Partners. The ideas and opinions expressed in this podcast should not be taken as investment advice. Always consult with your financial advisor before investing.
Hello and welcome back to another episode of DeFi Decoded. I am Alex Tapscott here with co-host Andrew Young. Andrew, we've been talking a lot about how TradFi has increasingly been embracing crypto. Now that the big story in 2024 has been the massive success of the Bitcoin ETFs, which have gathered to date over $24 billion, making them the most successful ETF launch in history. And behind the scenes, how we're also seeing increasing enterprise adoption of the technology and a greater sort of willingness to embrace some of the fundamentals of Web3, tokenization of real world assets being one key example. And today we've got a great guest on the show who can help sort of shine some light on Wall Street's interest in crypto and how the industry is embracing the technology. One of the OGs of TradFi and crypto coming together, Matt Bartlett of VanEck. So VanEck, for people who don't know, is an asset manager with about $108 billion of assets under management. One of the first in the US to offer investors access to international markets. And they also recognized early on the potential of things like gold investing, ETFs, and of course, crypto. Matt has been leading this effort inside the firm for almost 10 years, which I think would make him like a senior citizen in the world of crypto on Wall Street. And he's someone who's obviously been through a couple cycles and can shed some light on it. For anybody who follows VanEck on Twitter and knows about the firm, and I think a lot of people who are listening to this probably do, they've got a Pudgy Penguin as their PFP. Their content online is irreverent. It's extremely knowledgeable. This is a firm that isn't just taking advantage of an interest in a new asset class. They've really been leading the charge in a lot of important ways. So we're really happy to have Matt on the show to tell us a little bit more about it and to maybe shine some light on where things are headed with the integration of TradFi and crypto. So Matt, thank you so much for joining. Welcome.
Thanks for having me.
So Matt, tell us a little bit about your background. We're always curious to get to know the folks that we talk to. You're someone who's been at it at VanEck and crypto for quite some time, but I'm guessing you had a career before that. So tell us a bit about your journey.
Sure. So roughly 20 years in TradFi, split between Franklin Templeton Investments and now VanEck for the last 11 years. I was mostly in charge. Actually, I opened up our Tampa office in 2013. But for those of you who follow VanEck, we're based out of New York with offices globally. On the personal side, I started getting into crypto in 2016 and 17. I started buying my first NFTs. I was a part of the Decentraland land auction. So I had these ambitions of creating a metaverse, digital winery where I can connect real life brands with people in this metaverse environment. That was a bit ahead of the curve. So we ran into crypto winter in 2018. Like many, sort of became a little bit disenchanted with the space. And then in 2021, I got heavily involved in a project called Altered State Machine, which was democratizing ownership of AI through these brain NFTs. It's still a work in progress, but it was like really interesting. And it sort of reignited the passion for me to really keep up on the technology. And then at the same time, Jan VanEck, our CEO, wanted to have his own NFT collection. So we launched this VanEck community NFT in May of 2022. 1,000 assets on Ethereum. We had 50,000 people sign up for it, which was great. A lot of that had to do with it being free. And it had a funny caveat. We didn't want you to trade it just in case Gary Gensler and the SEC ever deemed it to be a security. So it's more of like a historic artifact, if you will. But after the success of that, Jan then changed my role to head of Web3. And my main responsibility is to build out our crypto native capability. So that's really where I spend the majority of my time.
So tell us a little bit about the products that you guys have launched so far. I know that you've been early building out a suite of crypto ETFs and ETNs. Mm-hmm. You've got this dedicated digital asset team. Tell us a bit about that journey. And then I'd love to dig in as well to that Web3 capability technology side of it too.
Yeah. And just, fair warning, I can't speak too much to individual securities, but we could touch on it. So we were the first in the US in terms of an ETF shop to actually file for a Bitcoin ETF back in 2017. as you know. I mean, that's a long journey, lots of battles there.
Yeah, that's
That came to fruition in January. Of course, we launched the ETH ETF. We did have an ETH futures ETF, but that basically we closed once you had a more efficient vehicle to get the expression on ETH that you were looking for. We have a pretty robust digital assets team. The majority of the team is comprised of portfolio managers, product managers, investment analysts. We do have some private funds, a digital assets alpha strategy, a smart contract leaders fund that gives you more broad exposure to, Ethereum, Polygon, and other chains, right? And then we have made some investments privately. One more notably, I think, was either the summer of last year, maybe, or the year before. We invested $1 million into a platform called L1 or L1 Advisors, where RIAs or registered investment advisors who work with clients that hold crypto in self-custody. They could manage them in sort of a holistic wealth management way. So, there's a lot happening. But again, on my end, it's more to build things, less on the investment solution side.
right. Yeah, it seems like what the success of these ETFs have shown is that there are a lot of people who are very interested in owning this asset class, who are either like unable or unwilling to do it by opening a wallet with Coinbase or, doing it in the crypto native way. Like they're looking for something that is convenient, that is in a regulated structure, that their advisor can, put in their portfolio, that they can own in a 401k. And even though, in my opinion, Bitcoin ETFs are an important step, but they're pretty modest in terms of as an innovation. They've still really demonstrated that there's this real product market fit. So have you found that as well?
Well, I think in most cases, investors who did not invest into Bitcoin previously, they weren't into self-custody, not your key, not your crypto. They don't really care. They just want exposure, right, to the price action, and that's what the spot Bitcoin ETFs give you, without having to worry about what happens to my private key or my ledger hardware, right? So I think it's a great start. There's definitely more innovations to come. Obviously, there's more products out there that are starting to blend different chains and different cryptocurrencies. So I'm sure we'll see tons more.
Cool. I have lots of questions. Andrew, do you want to jump in?
Yeah, no, I just want to hear a little bit about, I guess, beyond, we can start with DeFi, I guess, to start, just because we're obviously DeFi decoded. Curious, what you guys are thinking about within the DeFi space. Is there, any, I think in Canada, we've been a little bit more sort of innovative on the ETFs. I think there's some people are trying to get some DeFi focused ETFs out. Just kind of curious, I guess, how do you see sort of the DeFi space evolving in conjunction with sort of what you guys are doing?
Sure. Well, for one, it's not necessarily a product of ours, but Nick VanEck, Jan's son, started Agora stablecoin recently. VanEck's involvement is to manage the treasury, and I believe that's available outside the U.S., but they tend to share transaction fees, revenue with those dApps and users that are building and leveraging the stablecoin. So that's interesting. On the RWA side, we've done a lot of R&D from the perspective of an issuer in terms of tokenized strategies. And I think in general, we find that at least right now that there's still pretty low demand and fragmented liquidity for these tokenized offerings. And what I mean by that is, in general, most investors, your retail investors, would probably just prefer the traditional investment vehicles over tokenized ones, right? I joke sometimes, my dad who owns mutual funds and ETFs, he's not asking me Matt, these VanEck products are great, but when can I get the tokenized version? He doesn't care. He just wants the most efficient exposure, right? And so, will everything go on chain eventually? Yeah, maybe 10 years plus. And I'm sure that it will take that long. In the short term, we've been doing more on finding assets that are more uniquely enabled by blockchain rather than just sort of changing the wrapper. And so that's why we have a focus right now with what I'm working on with SegMint tied to tokenized collectibles, where you've seen over the last year, there is more demand and liquidity for that. Just look at go to OpenSea right now. Tell me what the top collection is. It's likely Courtyard, right? Because their volume's pretty high every day. So obviously there's some interest there.
Yeah, I think what's actually interesting is on our show last week, we actually had the CEO of Plume Network. I'm not sure if you,
Chris,
which is like, yeah, exactly, which is a RWA focused chain. And we had a good discussion about collectibles and how those were, potentially the future, maybe not the future, but like something that is a very obvious use case. I sort of brought up the example of trading cards or like basketball cards and things like that, which had a huge boom back in 2021, similar to when crypto was booming. But they have incredibly high transaction costs. Like you're paying like 10 to 15% when you buy them on eBay or whatnot. And so we talked about this idea of essentially, tokenizing it. And then if you just want to trade, you don't want to actually take delivery of the collectible, you could just trade the tokenized version of it. I'm curious, I guess, like with what you're doing with SegMint, within the collectible space, is there kind of like a specific subsector of the collectible space that you think is really exciting or?
Yeah, well, I mean, you bring up collectible cards, and there's several platforms doing collectible cards, right? And to me, and we will be as well. But that's the low hanging fruit, because you think about these slabs of collectible cards. They're small, they're easy to store, they're already graded. You could verify them with PSA Vault or CCG. Insurance is low, right? So a lot of the infrastructure is already set there. And then I think you start to see some of these platforms where, hey, if you submit your cards to the vault to be tokenized, you'll get a 1% royalty every time they trade. If the card's very valuable, you have the $500,000 Charizard from Pokemon, you could get a loan on that in a matter of seconds, right? So there's some interesting use cases there. But we're going to be more split with, certainly cards will be a focus, but with SegMint, we try to offer maybe a mix between like eBay and Sotheby's, where you have tokenized collectibles, but more on the luxury, hard to find investment grade ones. So maybe like two examples that I think are really unique. We partnered with a company called Devin Labs. David Garrett's basically mastered the technology around chain of custody for wine and winemakers. But personally, he's been on this list with Egon Mueller out of Germany for well over a decade. After 10 years, they let him get an allocation of 12 bottles of their Riesling. Number one, it's the best Riesling in the world. The vineyards were planted by the Romans. It's almost impossible to find a half bottle. He brought it to SegMint, this case. It's the only case on any global marketplace where you could find this case. So that's a great use case. And then another one would be Metacask, Metacask was the first company to tokenize a cask of whiskey on Ethereum back in 2021. They just did it again with a Liquid 2008, this time on the base. Also brought it to SegMint. And at SegMint, we have these things which we can get into, but keys or fractions. Long story short, if you own a key or a fraction past the bottling date, you actually get to redeem for 2 bottles of this liquid gold, which is, for a collector, it's a really unique opportunity, because, if you're familiar with like a brand such as Pappy Van Winkle, you know how hard it is to get a Pappy Van Winkle. You've got to know somebody or have 1 million points at your local liquor store to have a shot, right? So it's sort of allowing people for these really unique items to jump the line. And I think that stands out versus just general access. Oh, I could pay $500,000 for that Charizard. But what if you could have gotten it at $1,000 or $500? I mean, that's more interesting, I think.
Yeah, definitely. The other thing too that reminds me of is the idea of like an in-kind subscription or redemption. It's like you have an asset and it has a claim on the underlying thing, and you can get it, like redeem it in kind, right? Like it's like I own the token and represented in the vault, but it's a claim on wine, and if I want to drink the wine, I can drink the wine.
For sure. But I think the difference between the card aspect and the wine is that the card, like, it's been done, it's replicable. To do wine, to do casks, maybe watches, it's like another animal. And I think that's why we've decided to either choose to work with those who figured it out and then do what we can do where we don't need, let's say, the experts, sort of have that blend. But anyway.
Yeah. Interesting. VanEck is a firm that's known as an innovator in the ETF world, right? And if you go on your website, you'll see that there are ETFs for so many interesting different themes, whether it's gaming, gold miners, green bonds, infrastructure, high yield municipal bonds, etc. What's notable about all of that is that a lot of those assets were not always easily accessible to mainstream investors. And one of the things that ETFs do, other than give people the ability to invest in funds like stocks that trade intraday, is actually to open up the world of investing to like a whole new range of assets and strategies. And that list that I just kind of went through is like 8 of 200, kind of typifies that. And I'm wondering how you think about tokenization, because we've talked about on the show a little bit about how, in a way, tokens, like ETFs and tokens, are both sort of like containers for assets. They are this sort of standard unit that they all look the same from the outside, but if you look at the underlying assets, they can all be completely different, right? And ETFs, by kind of democratizing access to different assets and strategies, helped the American and Canadian, to a lesser extent, Canadian, European, and so forth, investing public get exposure to this. Whether or not tokens kind of help to turbocharge that and bring it globally. Like, is a token a way to make it possible for anyone anywhere to invest in any kind of asset, basically?
Yeah. Well, I mean, the answer is yes, but I think you have the luxury of maybe being in Canada versus the US, where we're really lacking regulatory framework. And I mean, we're still waiting on regulatory, guidance on stable coins, like they haven't figured that out yet. So yeah. Okay. Canada, so you are. Okay.
Canada's like, it's like that old quote that like, democracy is the worst system of government except for all the others. It's like Canada looks like a leader, but it's not compared to other countries, but it's like just a tiny bit ahead in most respects when it comes to right?
Fair enough. And I think so then it goes to really, I think token standard is important, fungible versus non-fungible. And obviously some of the examples you described, you could have, we could have a bottle of wine that's represented by 1 million fungible tokens, or you could have an NFT that represents that one bottle. And so it's a big reason for why we actually launched SegMint out of Germany, out of Frankfurt. We have a VanEck Europe entity. And the reason for that is there is a path there. And we're actually talking about fractionalized NFTs. And so that's why we started there. And hey, maybe if there's a regime change someday and things open up in the US, we can, we could sell some of these products here. But for right now, we're kind of gated. And so I think the view and the reason for maybe going to Germany is that obviously we have exposure there, we have a team there, et cetera. But if we can maybe get regulated by BaFin, one regulator, that might give us the path to do it in other jurisdictions. So that's how we're thinking about it right now. But again, going back to the tokenization angle, it's like we'll tokenize private funds, and those will be available. For instance, I mentioned L1 earlier. Those will be available for RIAs to recommend to their, accredited investors, if you will. But they're just not going to be for everybody. It really depends on what the offering is.
So, well, it's sort of interesting. Like, if you're an accredited investor in the U.S. and you deal with an RIA, you already have access to like so many different things, right?
Yeah.
You're sort of in the sort of rarefied air where you can get access to things that regular people can't even access because of the the wisdom of the regulations. But really, the benefit of tokenization of those strategies is to lower the barrier to access, right? Mm-hmm. And obviously, this is where the technology runs up against the lack of certainty around the rules, because you'd love to be able to VanEck, all things being equal, if you could, sell fund products or manufacture them and have them be sold to people all around the world who want to have access to U.S. assets that can appreciate in value, and other alternatives, that would be great. But that obviously is not feasible in the current regulatory framework.
Yeah.
Andrew?
Looking forward, I'm just kind of curious, like which sectors of the crypto space are you kind of most excited about? I think one thing that's always been really interesting to me about sort of VanEck is it's been seen as kind of like a very pro ETH, at least on social media, and I guess Sol to a certain extent as well. But I'm just kind of curious, like how are you guys looking at the different chains? Do you guys kind of believe in this, one chain to rule them all, or are you guys more sort of a multi-chain focused? sort of narrative perspective?
I think multi-chain is the answer, right? I mean, we get the maxis, no matter the chain, trying to go toe to toe with our analysts on X all the time. But I mean, when you think about use cases, it's okay. Cross-border payments, okay, stablecoin. We're trying to do something there. Tokenized real-world assets. We're doing something there with SegMint. And I think some of the other opportunities, decentralized finance, lending, borrowing, etc. We're lightly working, doing some research in the background there. Estate planning is something that my department's looking into, more like self-custody based estate planning for Web3, which really is sort of needed right now. And I would argue that the existing solutions aren't really there. Again, we've got some people are just getting into crypto now, but there's been some who have been in it for a decade, and the most important thing to them were Ferraris and jewelry, and now it's family and beneficiary. So who knows, right? There could be an opportunity there. And then supply chain transparency, and that could go to, again, managing wine bottles for Devin, or managing the sort of the pipe behind trading, right? The infrastructure behind trading and what we're doing on that end. So there's a lot of opportunities where, it's not like we could do everything. The things that we're leaning into, I would say the stable coin, the tokenized real world assets, and some investment solutions, that's sort of where the focus is right now.
And what, I guess, thinking about like which sort of subsectors, which subsectors do you think are you, like, within this multi-chain world, are you kind of personally most excited about? Like, I know we sort of talked a little bit about fractionalized NFTs, obviously a lot of stuff going on right now with meme coins, which is a bit crazy, but is there anything in the sort of broader ecosystem that you're particularly excited about? Like maybe decentralized
I'll
AI?
say at the start, I'm very anti, just personally, meme coin. Meme coins, lotteries, jackpots, like none of this stuff is helping to move the space forward. I mean, it's interesting for a time being. I won't name the chain, but there's a new chain where you can use generative art to create the image for your meme coin and instantly publish or mint the supply. Who is that going to help? It's going to wreck the new people that are coming in and trying to chase returns, which doesn't help. I think it's on the tokenized real world asset side. You've got the collectible side, but then with regulatory improvements and changes, it could open up into things like real estate, tokenized real estate. Again, that's being done now. Like Fabrica.land is tokenizing real estate. But in the way that we're thinking about it, there's other things that you could do with once we have more rules set in place.
Right.
I'll give you an example. This might help. Maybe let me explain the lock and key model, what we did for SegMint, and then I'll sort of parlay that into sort of where you could disrupt things. So with SegMint, we basically did deep research on fractionalization. We looked into all the issues, things like maybe your fraction doesn't have a visual, maybe you need a liquidity pair, maybe it's not self-custody. And so what we built with this lock and key model, it works like this. You've got a Pudgy Penguin. You could bring it to SegMint. You create a vault and you lock the asset. The vault is owned by your Web3 wallet, and by default, all of the token-gated utility is sent back to your wallet using delegate.xyz. Once it's locked, you can create up to 100 keys. And the keys are 1155 tokens, fungible clones of whatever the image is, right, of whatever that visual is. But they're called keys because you need to own them all to unlock the asset. So in a novel way, they represent a form of shared ownership, a form of shared access. And that's what we put together for NFTs, right? Like your PFPs and then again, your tokenized collectibles. But now take that same model and apply it to real estate where maybe in the future there's a website where you could tokenize your vacation home. And you come to a SegMint like lock and key model platform where you can create the keys 52 weeks in a year. And now people are buying the keys for the opportunity to rent your home that week. And people are, you got the week of Thanksgiving, I want that week, right? And so people are trading based on when they could access the home. Whether that's a winner or not, I don't know, but it could disrupt something like Airbnb and timeshares. You could take the same model and apply it to private jets, yachts, collectible cars, etc., where you don't actually lose custody of the asset, but you're allowed to share access, if that makes sense.
Yeah, it does make sense. And it also almost reminds me of like a governance model, right? Where like even let's say there's an NFT and then you can create 100 different keys to access it. I mean, you could do the same thing where it's like, it's a corporation and it requires a majority vote in order to pass, proposal. And then all those key holders act as like partners in that venture. And I mean, that's not really that. Maybe that's sort of blending the line between fungible and non-fungible. Like I suppose a governance token, a fungible governance token that allows people to vote on, proposals is quite similar to that. But I like the idea of like taking a single thing, like a common enterprise, and then creating 100 keys that allow you to like have a say on how things are run. Because a lot, especially in the private corporate world, doing governance and voting can be quite clumsy, and like it's always ad hoc, and it always seems like it's a different thing every time. This is just my personal experience.
Yeah,
but it's,
well,
this would be a nifty like way to integrate that
for sure. And so when I say like I'd love to get into fractionalization of real estate, we're a German entity to have real estate tokens. Those are deemed crypto assets. You have to have a specific license for. You could only get the license, I don't know, mid 2026 or after. You can only go as fast as the regulators are where it can go, right? I mean, that's basically it. Yeah.
So, we got any predictions for the next year? I don't know if you guys have published anything recently. I have seen some numbers in the past, so maybe you can remind everyone, like, where does VanEck see Bitcoin the end of this year, end of next year?
Yeah, I would encourage everyone, if you go to VanEck.com, Matt Siegel, who's our head of digital asset research, and his analysts are publishing these. There's some on Bitcoin, Solana, Ethereum. I don't know them off the top of my head, so I don't want to give you a fake numbers, but I'd argue that they're pretty aggressive. so read the research and see what you think. I think the real prediction that I would make is more around there being innovations for onboarding Web 2 that maybe are not out yet, right? I mean, you saw some earlier this year, things like Privy, sign up with your email, pricing your products in fiat instead of crypto, which makes it easier for both the buyer and the seller. So there's lots of innovations there that are going to help the sort of consumer crypto experience. And we don't know what that will be yet, but there's just so many teams working on it. So that's what I'm most excited to see, because I want to see real onboarding occur, and maybe Abstract with Pudgy Penguin has a shot, right? They already have sort of retail exposure with Walmart, Target, and other retailers, and it's just sort of connecting with the Web 2 audience that doesn't necessarily want to hide the private key, right? So,
yeah. Well, you won't say it, but I will. So the reason I mentioned this is on CNBC yesterday. Matt Siegel said that he thinks that Bitcoin could get to $3 million per coin by 2050. So without like opining on the number itself, the rationale was quite interesting, and it's largely based on the idea that this is, it's mainstream now as an investment asset. It's becoming more mainstream as a monetary as instrument. And his model, I guess VanEck's model, says that he predicts that 2% of central bank reserves will be held in Bitcoin by that time. And that's pretty modest. I mean, a lot of people might say it's going to be a lot more than that, or that, the rise of Bitcoin will displace those institutions. This is basically saying, this is a monetary asset. It's here to stay. It's anti-inflationary. And it is an asset that is going to become more widely accepted by central banks and other big institutions. I don't think that's that far-fetched to believe. Whether or not you think that's going to be 3 million, 1 million, 10 million, I mean, who knows? But it's pretty interesting. I would strongly encourage anyone who's like watching the show to check out Matt's Twitter handle, the VanEck Twitter handle too. There's a lot of like really great insight and stuff that's practical too, like day to day. There's a lot of technical analysis on charts and I find that quite informative too. Andrew, do you have any other questions for Matt?
No, I think that was we sort of covered a lot, and we were pretty broad. I guess I'm kind of curious just to kind of tiptoe back into the sort of fractionalization and NFT space. I think like right now, it seems to me like sentiment has never been worse on NFTs, even though progress almost seems to have never been better in terms of like traction and RWAs and everything like that. Like it's funny because it's so different than 3 years ago when the quality of NFTs and I would say even the RWA space was quite poor. It was really just, PFPs on the NFT side and really just stable coins on the on the RWA side. So I guess what do you think is going to tip the scales, at least from like a sentiment perspective, to sort of get the boom in, I'll just lump them together, the NFT and RWA space together. I guess like, what do you think? Because to me, it seems like traction's great. It's just sentiment is horrible. And like we said, a lot of that's just because everyone's focusing on meme coins right now. Do you think do you see any like catalyst, for people who are big into the NFT space that's going to kind of like get the market going again?
Yeah. Okay. So a couple thoughts on that. In 2021, when, actually even this past March, right, there were two crypto punks that sold for like $15 million. If you're talking to a family member around the dinner table about why that's worth 15 million, that's a tough conversation. But if I showed you a watch NFT and I said, listen, this watch is backed by a physical watch that's vaulted, it's a $10,000 Rolex, and anyone in the world who owns this NFT could redeem it for the real thing, instantly people get intrinsic value. And okay, got it. Now, is it going to have 1,000,000% upside? Probably not. I'd argue it probably has some fair downside protection, right? It's a real asset. People can really grab a hold of that, and then you could have the conversation around why generative art might be valuable. So that's one thing. I did mention, of course, the onboarding best practices, which I think will be really important. But when you think about NFT collections in general, gosh, like 95% plus are probably worth nothing. And why are they worth nothing? Certainly people will still trade them, but the teams are at a runway of capital. They're no longer building. There's no real vision in the long term. But I would argue that there are several teams who are well funded and are able to sort of drive to their end vision. And that could be Pudgy Penguins, it could be Futureverse, it could be many other teams. Portals on Solana is a great example. There are winners there that I think long term can achieve their goals. Now, who knows if people are going to get back to the crazy prices that they were paying back in 2021. But if you just think about Pudgy Penguins just for a second, imagine you hold a Pudgy Penguin and that penguin's now being licensed for a collectible card game, a video game, plushies, etc., and you start getting licensing fees because you own the IP, because you own that penguin or something. That might get people interested in buying those collections, right? So you could end up seeing more of that, but we'll have to see how it plays out.
Yeah, I think the Pudgy Penguins is a great example because the thing I really like about what they're doing is, they essentially like I believe acquired Abstract Chain, and they're launching their own sort of like consumer focused L2. And as someone said, it's like this is one of the biggest crypto consumer brands in the world. Combine that with pretty hard driving founder who and I think like a pretty ripe atmosphere for bringing on new projects, and then if you own Pudgy, I mean, I'm not sure if it's locked in, but you'll probably get an airdrop of this new chain token. And like, I think that aspect makes a lot of sense.
I would assume they'll have some sort of rollout like Blast, right? Blast had gold, you bridge ETH over, you do things like that, you'll get a drop. You bring up Luca. If you've ever heard him speak, he's a fantastic leader. He's very optimistic. You could see why people follow. Abstract, the chain, we're in the process of deploying on Abstract right now. I don't know if it's necessarily something innovative yet, but I think they'll look to add those innovations, right? I mean, like their wallet, their Abstract wallet is basically Privy with a small add-on. So it's not there yet, but they'll drive to it. The bigger thing for me with Pudgy is that, I'm 42. When I look back at things with nostalgia, Nintendo video games, I mean, those are the things that I like. There are people in their 20s and 30s who played Pokemon on Nintendo DS and they collected the cards. I think Pudgy Penguins 15, 20 years from now will be the IP that those folks will have nostalgia about, looking back like, oh, that plushie I had, that there's a new Vibes TCG game. It's like, it's a collectible card game with Pudgy IP. Those will be the future collectibles in my mind, right? And so that's where I think they have a great opportunity. And again, distribution being everything, they're already in major retailers. So, if you're thinking about young adults, whether they're, 11, 12, 13, 14, et cetera, it's only a matter of time before those items start to be on the Christmas list and people are playing the games, et cetera.
Totally agree.
Such an interesting conversation, very wide ranging. I love that discussion around NFTs. I think Matt, you and I are basically aligned, because like meme coins have been suspect of for a very long time. Andrew and I have talked about this on the show.
Mm-hmm.
NFTs people kind of lump together in the sense simply that they have led to sky high prices and are evidence of sort of mania or something. But beneath the surface, actually, like NFTs are non-fungible tokens. They are tokens that represent, either something that is itself non-fungible or a claim on an asset that is totally unique. And what you mentioned, a watch, it could also be any piece of property. Most loans are non-fungible. Like every loan, every mortgage agreement is on a different house. It's got different terms. Like there's so many different assets in the economy that are actually one of one. And the system we have today of managing those assets, recording information about them, doing transactions is so antiquated. And so to me, there's so much, it's such fertile ground, the NFT world, for discussion around what is value. As people spend more time online, do they value collectible digital goods as much as collectible non-digital goods? How can we use NFTs as a way to represent value of other assets that are unique in the world? And on and on and on. I mean, it's like such a fascinating area to discuss. We may have to bring you back for an NFT episode.
Sure.
There's nothing so powerful as an idea whose time has come again, as I like to say. And I feel like NFTs are due for a renaissance of sorts. That was a great discussion, Matt. Thanks so much for joining us. Where can people follow you and VanEck online, learn more about what you guys are up to?
Yeah, maybe three quick things. So on X, Matt Bartlett VE, or at Matt Bartlett VE is my handle. I write a weekly Substack called blubbernotes.com. It's alpha for future NFT whales. And then we also have a podcast called RWA Segments. So we bring on people like some of the ones that we mentioned, Fede from Fabrica Land and others, just to educate. Like it's not a product push. It's really just to educate about the space. So those would be the maybe three resources to check out.
That's awesome. I love the name Blubber Notes for Future Whales. That's hilarious.
I try to work in a clever ocean pun each week in my subject line. So if you don't read that, you at least read the subject line and laugh. So
sounds great. All right, thanks, Matt. That's it for this week's episode of DeFi Decoded. I'm Alex Tapscott with Andrew Young. Great talk. By next week, we'll be recording after the election, so there may be some news to discuss. We will see you all there. Until then, take care. Bye.
The information contained herein does not constitute an offer or solicitation by anyone in the United States or in any other jurisdiction in which such an offer or solicitation is not authorized, or to any person to whom it is unlawful to make such an offer or solicitation. Prospective investors who are not residents in Canada should contact their financial advisor to determine whether securities of the funds may be lawfully sold in their jurisdiction.